Welcome to the Trading Lounge and the Day Ahead Report, and here we look at the S&P 500, and there's not a lot of change, as you can see. What we're seeing is a narrowing in the range through here. There is good reason to call the markets in both directions because obviously we're getting lower highs through here, but we do see this as a corrective pattern, and we are still expecting a break higher through here, as we've been expecting all the way through here. But sometimes you just got to be patient until the market buys at times. It's just sort of like filling in time, really, isn't it? Just travelling sort of sideways. But this is also interesting here as well, because when a market starts working into a triangle pattern or diminishing as this is here, we tend to lose interest in it, and it's a time not to lose interest in it because it's the time that it's getting ready to break out, and it's almost like a spring getting loaded as well. So it is a time to pay attention, and we do feel that it should break to the upside, but we don't have a lot of evidence for that. All we do have is this particular pattern down through here, which won't be so dominant in the cash market as it is in the futures market here. But we do have a three-wave price action through here, and also we've got one through here as well. So they are. That's why we're calling it into a triangle sort of pattern through here. Now the catalyst for this to break to the upside would be probably the non-farm payroll figures coming out. So look for that. But we are looking to the upside. If we were going to short, well then we'd need to be under the closest largest number as a retested resistance. These all failed their retests here, so we have to, just that simple fact alone makes us, I'd rather hold a long position rather than a short position, and that's the same for the US market as well. And slightly different sort of variation on those as on these patterns, but still all the same there as well. The European markets, well, the DAX is the same. You can see the pattern here, just a larger chart here for the DAX. The FTSE is in a different pattern as well. It's more like the Australian dollar. There is reason to count this down here as this is a nice five-wave structure down through here. So we could count that down for one and back for two over here, having this as an A and a B here. And there is kind of five waves up through here, enough to call that a C wave up through here for wave two. And then that would be calling that down for wave one here, and wave two coming back through here as such. So it would need to stay under this level here, but I think that it should break with the S&P 500. So we would be seeing this more as an A and a B and a C wave. Here's a corrective wave, but a safer trade would to have the 7,000 as support there. Intraday traders can use the subgroup 2 area here, the 6972, as support to work from that. Any shorting done from here would have to use the midpoint, the 6950, as a retested failure there, confirming that the midpoint, the 50, is the resistance there. The FTSE, that's just the DAX as well. Just get the FTSE up here. The FTSE is very much like the Australian dollar, or even the Australian market as such. We do have, even though this is down through here, we do have five waves completing down through here as well. So when we have a look at that in here, you can see that we've got the 1, 2, 3, 4, and 5 down through here. So we should see a break out of this little pennant to the upside here. But as always, we need to be above 72 before we trade long. Otherwise, you just too much exposure, unnecessary exposure. So anyway, keep an eye on that. But of course, that will just follow the other markets. But if this FTSE is the same as the Australian market and the Australian dollar, well, then we're likely to see a break up in that as well. So I might just bring up the daily chart here for the ASX market, but just bear with me here for a second. Okay, there we go. So this here would have the 38.2 retracement level from this point here, coming back up into here as the 38.2 retracement level in here, so it shouldn't come much further down through here, and this is of course above, this is across the 4,300. A move below the 4250 would have to see it as something else through here. So within this pattern here, being a wave 4, they can get complicated. It does appear to be 5-wave structure down through here. So if that was the case, if this was 5 waves through here such, then we would get 3 waves back up through here, then another 5 waves through here before we've seen any further move to the upside, and then a 5-wave structure there. If this is not a 5-wave structure down through here, and when we look at the futures market, it looks more like an ABC pattern, then we would get these 5 waves up through here. Now, of course, the material sector is not really going to take us up there, is it? The material sector is in more of a bearish pattern, so it's going to be the banks and those sorts of yeah. Well, the banks will probably lead us to the upside, so that would be that would be the better trade to the upside. But pointing out that the copper market was very strong last night, but we'll get there in a moment. This is the move down through here. So we've been doing our best to count this down through here. We've got wave 1, wave 2, wave 3, wave 4, wave 5 for the A wave here. And then we would look at this as being an A and a B and a C for the B wave, and then down for the C wave. But we really want this low to stay in place now. Having a spike down through the 4.3 here is actually quite healthy, because if we do find support back up on the 4.3 there, then that would be a nice long trade from that point, because it's proven itself it can get back above there. If the market came down below the 42.50 here, then that would cause a problem, because we're really going past the 38.2 retracement level there. But as you can see, we're in this channel to the downside, and picking bottoms is always tricky business. But if the US markets do break to the upside, then we're likely to see the FTSE and this market rally as well. And as I mentioned just a moment ago, the copper markets were the strongest last night. So let's have a look at the commodities. Okay, starting with the gold prices here on this daily chart here, what I want to draw your attention to is the triangle pattern through here. I mean, gold, there's nothing much really to talk about with gold, because it's as you can see, it's really stalling at the 1700 here. So as expected, so we'll either see a larger correction occur through here, or we'll see it clinging on and sticking to the 1700. But I think the copper market's a little bit more important at this stage, base metals. This particular pattern through here is what copper's been going through at the moment, and copper's starting to find a bit of support now as well. So if you can just sort of imagine this picture, get a fix on this picture here and what the outcome was here, then when we look at copper, you'll see that it's kind of the same picture as well. It's just that it's sort of delayed in time. We were also looking at this being a wave 4 as well through here. Once it had been finished, we'd see a move to the downside down to 300 here. But that's fine, but one step at a time. And while the market's been above the 340 here, while it's been above the 330, which is the top of group 1, well, then the market is supported. As simple as that, and it's doing its bounce. So then defining it further, the next level up is the 350. But between the 350 and the 330, the 340's really been helpful as well lately, because we could just simply say that while it's been above the 340, then it's supported, and then we were looking for a break up, and we've got that break up now. This is hitting the top of a trend channel here, so there's going to be a resistance here. The point being, though, is that if the 350 finds support here, we could see a stronger move up through here. Okay, so that can help with the material sector. The material sector is quite bearish at the moment, as you know, but because of the iron ore prices. But the iron ore prices have been coming down since the beginning of 2011. They're just coming down across the 100 mark now. That's all in its first swing to the downside in 5 large waves. But when we look at, like, say, BHP as an example of the material sector, say the XMJ for Australia, the material sector, is very similar to this here. So we would also be looking at this being a 4th wave up through here and a 5th wave coming down through here. So now that this is broke to the downside here, if copper does push to the upside, then we'll see a retest of the 65, and we'll see some sort of consolidation, some effort to try and get back up above the 65, which is the balance line within in this area through here as well. The 62 is important here as always, because in terms of ratios, and that's how the market works in an unfolding spiral, well, then the 61.8, which is very close to the 62, is always a special point there as well within the market. So we'll see that if there's a strong copper price, we'll see some support in the FMGs and the Rios and the BHPs and so forth. So but just narrowing into this copper price here a little bit as well, we were looking for a little 5-wave structure up, and I grant you that the 5 waves up that we're looking for are in place, and they're not very good 5 waves, as they're overlapping wave structures. It's the 1, the 2, the 3, and the 4 here overlapping that. But the wave 4 in Forex and in leveraged derivatives is quite common to see. So I'll just run with that for the time being. And this does seem to be a nice impulse wave up. There can be another one in here. Otherwise, it's just going to fold back into the 350. Even if there is a new high here, once that's done, it will still roll back into here and check in support here. So when we narrow that down further here, we can see that all of this may be a wave 4 here. So we've got 1, 2, 3, 4, 5 to here for wave 1, wave 2 coming back. This could be the whole 3rd wave through here. This can be an A and a B and a C here. One more push up and then a move back into this area here. I'd need to pull this apart to really have a close look at it there. But certainly the 3rd wave here, possible 4th wave, or maybe the 5th wave's already built in through there. But one way or another, even if there is a new high, then it will still come back into the 350 there. So we need to work out, are we at the top of the triangle, or are we going to be pushing further up? We won't know that for a while, because we'll need to see the market come back into this area here, in 3 swings, either from this high or from another high, an A and a B and a C, or down for 1 and back for 2 and down for 3 and so forth. So it's going to be, a week of playing out through here before we can really call that in as a move higher, because 380 would be the next move in terms of ratios from the 350 there. The silver market as well. Didn't talk about gold that much, but we'll talk about silver instead. So in the silver market, this is the weekly chart. I know it's rather big, but it can be counted both ways. So it can be counted as a bearish move down for wave 1, back for wave 2. Then the next, and this would be a whole 3rd wave of an intermediate degree. That's what the brackets are here, intermediate degree. The next degree smaller is the minor wave. So in wave 2 coming down, wave 3 coming down through here, we would have 5 waves of minor degree. So we'd have down for wave 1, an A and a B and a C for wave 2, and then the next degree down, which would be the minute degree, so down for 1 and back for 2. The 61.8 retracement level is 33, which is interesting because it's also the top of minor group 1 as well. So minor group 1, if it develops support on on minor group 1, well, then we can expect it at the next ratio, the 5, 1, 2, 3, 5. So it can be counted as a bearish pattern coming down, and we'll find out that very shortly as it deals with this area through here. The bullish pattern, which would be the an A and a B and a C for wave A. and then an A and a B and a C for wave B, and then the C wave down through here, and that would be the completion of this. And then we would see a move continuing, strongly back up through here. So how this counts back up here is going to be really important. And it's not that we've missed a lot here, by the way, too, because if it is a big bullish pattern, then what we'll be looking for is 5 waves up and then 3 waves back, and then we will move in. Now, this pattern's a bit similar to the gold price in Australia, with the Australian dollar pulling down. So the gold pattern for the Australian market would be a wave 4 down through here, and we'll be pushing up because of the low dollar. But that's another story. But just drilling into here a little bit, we can count this. I'm counting it both ways, as a bullish market and a bearish market, until we've got the evidence. So from the low here, this move up here, I'll be counting this as wave 1, and then wave 2 back over here. So up for 1, a little A, B, C here for an A, and a B and a C here for wave 2 here, and then we would be impulsing to the upside there, and then we'll be looking at a wave 3 up here. So we'll be looking at a wave 3 the top of here really, and then a wave 4, and if we get a wave 5 moving up through there, then we've got an impulse wave to the upside. So that 33 up here is going to become really critical for us to work out. Do we have a corrective rally up through here or an impulse wave up here? Now, the corrective rally up through here, I've labelled this a bit wrong through here. That should have been the A wave here. But basically an A wave to here and a B wave over to here, this little B wave here, and then 5 waves up through here, which will take us into the top now, which would be wave 1, wave 2, wave 3, wave 4, and wave 5 coming into play there now. So that's what we'd be sort of looking at there. So that could very well be a top there, and in gold as well. It does seem a bit corrective in there, so we can have another push up, but I just think we should just allow it some space and time. And to me, it's really all about the 33 up here becoming the support or the resistance at that point. Okay, let's have a look at oil. And I mean, oil's just going to follow stock. That's the indices, rather. So that's the same thing. So yeah, so this is I'm just counting it a different way today, just to which I feel a bit more comfortable with, actually, in terms of a corrective pattern. So we would be having these first 3 waves down here as an A and a B and a C for the A wave, and then the B wave over here fits nicely because we've got this 5 wave structure here. So it would be an A and a B wave in 3, and then a C wave in 5, as it should be for the B wave, and then the C wave in through here. And as we've mentioned all the time, as long as the 95 is support here, even though we've had spikes down through here, the breakout is important, but the retest is more important. And in this case, none of these retests failed. They all held their ground, and the 95 is the support. So we would be looking for this to it's kind of the same pattern, really, isn't it, as the but in its own way, as the US indices. So we'll see that well, along as above 95, we'll call it to the upside, and we'll call this corrective. And if that's the case, then we should see a new high above here. So then we'll be looking for the 100 at this stage to be tested as this next wave 5 over through here. So we'll be looking for an impulse wave to the upside through here. Okay, let's have a look at currencies. Okay, starting with the US dollar, and this particular pattern through here is in 3 waves. Okay, so it's a corrective wave. So that means that this low here should be taken out. If this low here is taken out, then we need to be, and I'm quite happy about that too, because I know when a market gets stuck under the 82, which is the pivot within group 1, 81, 82, 83, then it's really sort of doomed to the downside. So we should really start looking at this sort of area down through here at the 80 in here now. So, but once again, let's just take it step by step. But the bias is to the downside, simply because of this 3-wave pattern here. Yeah, so if that's going to be the case, then we'll see the euro push to the upside, and perhaps the Australian dollar has found its low for wave 3 as well. So let's have a look at the euro here. The bottom line with the euro is of course the 125 being support or resistance, and as you can see, it's still support here. It's building the nice support here. It never broke through here, so it's support. Yep, so just sort of breaking that down further through here. If the US dollar is going to break to the downside, then we need to look at this moving further to the upside, and you can see that the support is there, so we really need to sort of focus on the long side with that, and just breaking that down further through here. So this is just the 1 hour chart here. We can see that we've obviously got wave 1 here and wave 2, and the third wave's in here. This may be the fourth and the fifth here, but the situation here is we're really looking for support on the 126 now, aren't we? So what support on the 126 would enable us to scale in through subgroup 1 here. Just see if I've got a smaller chart here. Okay, great. Let me just have a closer look in here with this. So we've got up for wave 1 here, back for wave 2, then we've got 1, 2, 3, 4, 5 for the third wave, then we've got the fourth wave and the fifth wave, then we've got the A, the B and the C here. And I like the C wave like this too. You see how it's sort of really low and lazy like that? That's it's going through an accumulation sort of process, so we should see that lift off the 126 there now. So that should be a long trade at that stage there, and of course that will follow the S&P 500 and so forth, so you can look for that to push up from there. The Australian dollar is obviously more tune with what's happening with the materials sector, of course, and we're looking, as mentioned yesterday, I won't go over all this too much, but basically the 1, the 2 and the 3, so we're looking for the third wave down through here, and we're close to it at this stage here, so we should expect a rally into wave 4 at some stage now. That's what we'll be sort of looking for. The wave 4s can be complicated and overlapping wave structures and so forth, so you're going to have to be, they're not, in Elliott terms, we don't trade the wave 4 because of their short range situations, but they shouldn't pull back too much, and then we should see another move down. So depending on the degree of structure that you're trading, then you'll be holding long or short there. So the 102 is important because it's the pivot within group 2, and while it's is support there, then resistance here, then the bias is to the downside. But in just considering the other markets and what's sort of going on here as well, just drilling in here, just have a closer look at it here. Yeah, look. While it's above the 72, while it's above the group 2 here being supported, you'd have to expect a rally back up into this at least into the top of subgroup 1 through here. So just be a bit aware. We're looking for the low of wave 3. So long-term short traders should just continue to hold short. Scalpers and short-term traders really need to, if they're going to go short from here, then you need the stop under here or under the 72, or otherwise wait for support on the 72 there. So if you're trading, if you're scalping, you would look for support on the 2 there. Then you, depending if you're playing out for the the 7 or 9 point money management plan that we've got on our website, well then you would just be trading to this point here. Otherwise, the short-term traders will be trading to this level here and getting out through here and waiting to see if that becomes support there. But always the safest trade is working the closest largest number, and at the moment that is resistance. So any long trades really should wait wait for that to be above there. I'm just assuming this is going to go up through here because I can see that this is like a little either wave A and then a corrective pattern in 3 waves here, and so we've got a little corrective pattern within here, so it should break to the upside and also follow the S&P 500 up. The copper market was the strongest, so I'm sort of thinking that the support's going to come from that area there. On the news front too, I think we've got. I'll just go back into here. We've got unemployment figures today at 11:30, so just be aware of those. They should be up, and also the non-farm payroll, the ADP figures will be out tonight as well. So keep an eye on those ADP figures there because they're going to affect the non-farm payroll figures as well. Alrighty, well that's it. So good morning and good luck.